From our Stars and Dogs segment, it's time for this week's Star. So the Star of the week, we're going to move on to our Star this week, and it's a company that has become familiar with this segment, our Star segment. It's Applied Optoelectronics, AAOI on the NASDAQ. This company has been in our U.S. growth stock coverage for just over a year now, and we've been tremendously happy with the performance. AAOI is a developer and manufacturer of advanced optical products. The company's products are the building blocks for broadband fiber access networks around the world, where they are used in internet data centers, CATV, broadband, and fiber-to-home markets. Now, this past week, the company shares are up around 25%. Yesterday, they rose around 8% on the day. Over the past year to date, they're up around 250%. Why did the shares surge yesterday? Well, they came out with unaudited second quarter results. Their earnings, they upped their guidance going forward. The numbers that they came up with were 18% higher at the midpoint of their guidance for the second quarter in terms of earnings. That drove the share price higher. Now, the preliminary release was low on details as to what is driving the growth, but we expect that the story is similar to what we've seen in the last 4 quarters. Management has stated the results over this time were driven by the improvement in manufacturing costs, capacity expansion, and solid execution by the company's production team. The fundamental growth story for AAOI supports a continuation of the operational outperformance trend. Hyperscale data center demand is booming and should continue into the second half of 2017 as major cloud computing players like Amazon and Microsoft continue to allocate large CapEx dollars into growing their cloud center data centers. AAOI's revenue growth should continue to produce strong year-over-year gains. Now, following our initial recommendation at $15.99, this company actually dropped to as low as $9 within 2 weeks following that recommendation. The company had a poor quarter, but it was a one-time event, clearly. The stock has recovered tremendously today to trade above the $80 level and is now up 400% since our April recommendation last year. It is actually one of the top 5 stocks in terms of returns year-to-date on the entire NASDAQ exchange. Consensus earnings estimates for the company have rocketed this year to $5.55. That gives the company a forward PE in the range of 15, which is actually still below the market. Now, we caution that company is in what can be a cyclical segment. So in our last update on the company, we continued it as a spec buy. Today, we just put out a new report to clients. We cannot issue put out today what our recommendation to clients was there. But the gains that we have seen this week, the 25% gain, the 250% gain on the year, give Applied Optoelectronics the coveted status of our Star of the Week.